Hey guys, and welcome to another edition of Swingin' Sunday Scan for January the 30th, 2022. Plan for today, we're going to go right into looking at the overall market. We're going to quickly go over some previous ideas, and we're going to rapid fire 10 new trade ideas. Guys, if you like this content, please hit that like button. If you want to see more content like this, hit that subscribe button with the bell, and you'll get notifications for any new content we put out. Alright, let's jump right into the markets. The SPY. Last 5 days we basically put in a consolidation range, bottom around 420 and top around 442. I think overall for the time being I'm leaning towards a long bias for a short bounce. If next week at any point we stay below the 442 area and break below the 420 area significantly, we might be looking for a deeper flush. But what I'm really hoping for is a bounce up into the 450 area or even up towards the 470 area for a short opportunity. The red box that I drew is basically an area that I look at as a possible resistance area. We have a pivot over here put in September, which was resistance. Here in December, we tested this area as support and bounce. So now that we've broken below this area, we might bounce into that resistance and supply area and possibly look for a reversal lower in that area. This green box here is basically the underside of this trend. If we put in a rally up into this area, I consider this a decent area for looking for a reversal to the downside as well. The QQQ, we have basically the exact same story. However, the supply area as well as the underside of the trend are basically lining up in the same area around $380. So it might be worthwhile looking at the QQQ as an indicator on when we can look for a reversal to the downside. Something to note here as a possible clue for a longer move to the downside. QQQ is looking weak where we broke below this pivot low here in September, October, meaning the QQQ being mainly tech stocks, and since the SPY is tech heavy, if the QQQ is looking relatively weak to the overall market, this could be a clue that we're seeing a top on the market and hopefully a longer bear run to the downside. We have tons of room down below, so I'm hoping this is finally the time where we can give the market a break and have a longer and deeper retrace. It's been a long time coming, so I'm not holding my breath. We could easily rally from this point on forward and break into all-time highs, but one can hope and dream. Let's jump in and look at some previous ideas we mentioned last couple weeks. MRUS, this one hit target last week if you followed the areas of entry and a risk as well as the target. This one I was not in, but this one worked pretty flawlessly even if you were to trail the daily pivots. HALU also hit target last week if you follow the areas I mentioned in week 1. Again, worked flawlessly even if you're trailing on pivots. BHC again hit target last week. I did talk about this one as a possible concern bouncing off this trend area. We did see a bit of a bounce, but it reversed to the downside and again worked flawlessly. All these three trades I was not in and kind of wondering why I didn't take them. A big part of it was purchasing power. I don't think I would have had enough purchasing power to be in all three of these trades for this long. Oh well, on to the next. KSS, here is a loser that I called. This one I wanted to talk about in particular because of the massive gap against this trade idea on January the 24th. With this trade idea, we would have been out of this trade, but I wanted to bring this up because I have mentioned a couple times on previous videos that I do not like to trade stocks that gap. Here's an example of a big gap on this stock. Here's another example of a big gap on this stock. Here's another example of a big gap on this stock. Here's another example of a big gap. So in other words, guys, the reason why I don't like trading stocks that gap often is they're more likely to gap again. This is a perfect example of why I decided not to trade the stock because of the gaps that it had in the past. Because they are likely to gap again. I wasn't in this trade. Luckily, even if I did take this trade, I would have been out before the gap because it crossed my risk level. I do trade with hard stops, so I would have been out of this trade, but still, this just further strengthens the fact that I will be avoiding stocks that gap off. In fact, I am likely to make that part of my trading rules, and I do have a list of do not trade stocks, and KSS has officially entered that list. KSS is on my do not trade list. FICO is a bit of a disappointment. This one we've been stalking from the beginning of the year, but there is a great lesson to learn here, again, about earnings. I've mentioned earnings many times, and this is a perfect example on why holding stocks through earnings is a bad idea. The morning after earnings on this stock, look at this green bar. My goodness, that is the widest range bar this stock has probably ever seen ever. And look at this volume. Wow. My plan with this stock was to look for an entry after earnings. However, I was not really feeling like entering this stock until it broke the lows below 413. But I was willing to get in early, but I planned on not putting an entry in until Tuesday. I basically wanted to see what the reaction of earnings was going to be the day after, because they reported earnings in the evening on the 27th. And on the 28th, wow, it broke the highs of this pivot. It broke the stop loss on my planned risk. So at the moment, this trade idea is canceled, but I'll keep it on the watch list to see what it does going forward. FTS was another one we talked about last week, where I looked at possibly getting back in this one if it double bottomed. It did double bottom. I did not get in it. It would have been off to a great start. However, the risk size was still pretty wide. Not really too disappointed about not getting in this one. Earnings is coming up pretty soon on this, so not too disappointed about this one, but looking at it at this point, it would have got off to a good start. All right, guys, I got 10 new ideas for you. I'm in 2 shorts right now. I would like to diversify my trades and grab a couple longs just in case the market does bounce. So I'm going to quickly go over these ideas, call out the areas I'm interested in getting in and where I'd be willing to risk, as well as the target. I'll say one thing I like about the trade idea and one thing that I'm concerned about. PRAA entry around 46.40, risk 44.91, target around 50.88. I love how smooth this one has retraced to the 50 period moving average. Do not like the double top. Sometimes that is a sign of reversal. VNC, this one is nicely piercing the 200 period moving average. And if you look down along the yellow line, it has previously rallied from this level before. This one, similar to the last one, I'm not a huge fan of the double top, but both this and the last one, we'd be looking at taking full profits before breaking through that area, and in fact will likely take partial even further below those areas. ARW, this one's very similar to the last one because we're piercing that yellow 200 period moving average. Something I don't like is we've slightly broken below these 2 pivots here, which looks like a double bottom. It is a slight concern. However, these are areas and not necessarily exact numbers. But this one I'm looking long around 124.01, risk around 117.33, target around 137.23. LYV, looking at entry around 106.01, risk 99.60, target around 125.24. This one I like because we're testing that $100 area. $100 is a big psychological number and can easily be held as a significant support level. What I don't like about this chart is this gap. Trader beware, trading is risky. This one has gapped in the past. This is more likely to gap in the future. To me, that's a decent concern. Full disclosure, these are all ideas. I'm likely only going to enter 2 to 3 of these. Which ones I haven't decided yet. SBNY. This one I've chosen to put in a really tight stop loss. The better entry would probably be around 320, but the risk to reward on this one up until the top of that pivot is not super great. I like to look for 3 to 1 on all my trades. Getting it around 320 to the top of the pivot would probably put you around just under 2 to 1. This one I put entry around 302.44 with risk 287.89, target around 346.21. This is similar to the last where it's holding a pretty significant number around 300. If you look at the monthly and weekly chart, the stock is super extended. That's probably my biggest concern. Look at that topping tail on that monthly bar. There are so many stocks out there since the COVID decline that are super extended. This not being an exception. I'll be honest, guys, I'm probably going to stay away from this one. STZ, entry around 237.33, risk 230.95, and target around 256.87. Something I like about this one, if you look at the monthly chart, there's a pivot high around 2018 where we're retracing to. The high of that pivot is 236.62. So the 230s is a significant area for the history of the stock. The stock is recently broken into all-time highs and is basically retracing and testing the previous high. I used a similar strategy on this one where I'm taking a pretty tight stop loss. The proper entry is probably around 240. But again, taking it at 240 destroys the risk to reward. So I'd rather take the tighter stop potentially to reap a bigger reward and take a chance on this one. Something I'm not a big fan of this one was this big red bar here. That red bar took place on earnings. That could be a sign of weakness. Overall, the pattern on this one for me looks really good. EXTR, entry 1289, risk 1168, target 1653. Something I like about this one, if you look at the weekly chart on the bottom left hand side, $12 area has been a pretty significant resistance area which we have since broken through and is now testing as support. $12 is a nice round hold number, which is a psychological number which could be a decent support area where buyers could step in. We just had earnings with a full day that has gone by, so we're likely past any wild moves the stock is going to make, but we could see a balance with the market. What I would say with this one is the retrace is pretty deep on the daily. The weekly pullback looks, just eyeballing it, around that 60% range, which is ideal if you look at Fibonacci. POST. Something I like about this stock is it's not crazy overextended like a lot of the other stocks are, or the majority of other stocks are in the market since the COVID decline. So there's two things that I don't like about this one. If you look over here, there's a pretty big gap over here. If you don't remember why I'm not a big fan of trading stocks that gap, rewind this video. This one is more of a watch to see what happens after earnings. Earnings on this stock is being reported currently in the evening of February the 3rd. So there's no way I'm going to trade this one prior to that, but this one might be of interest after a full day following earnings. REYN. The pullback on this is pretty smooth. That's something I like. The something I don't like is earnings coming up in a few days. There's not enough time to get in this stock to see a decent move. Like the last one, this one I'd be looking as a watch after earnings to see how this reacts. Overall, this one I would just be looking as a watch after earnings. And finally, NNI, entry 89.20, risk 86.06. Target 98.76. I do like the consolidation of bars here at the pullback. This could make for a decent bounce, testing the highs around the $100 area. I like those bottoming tails as well, which as a pattern could be a sign of buyers stepping up. The biggest thing about this stock is how extended this looks on the monthly and the weekly. If you look at the monthly with that red engulfing bar basically negating the whole green bar of the previous month, as a pattern looks like a sign of weakness. Earnings is also not that far away, February 28th, reporting in the evening, but the pattern on this one looks interesting. My instincts on this, however, are telling me that if this does break below the lows of 86, this could have a wicked run down. Overall, guys, I'll be honest, I'm not super crazy about any of these 10 ideas. I am really hoping that we are going to see a longer term bear market with the SPY and the Qs trending down for a good period of time. So overall, I'm more excited about looking for shorts in the next couple weeks, but I'm likely going to look at maybe taking one or two of these to diversify my current portfolio, which is 2 shorts, but I'm likely going to make a decision on which trades I'm going to enter into my platform later. Please, if this video helped you out in any way, please hit that like button. If you want to see more content like this in the future, please hit subscribe. If you click that bell, you'll get notifications for any new videos I put out. Thank you very much. If you made it to the end of the video, trade safe, and we'll see you on the next one.